Good day, everyone, and welcome. It's 10 o'clock, and please, we're not your financial advisor. Whatever you do, you are at your own risk, and we will start analyzing the market and trying to figure out what's going on. The auto trades are doing very well, and on the first half an hour, we got actually, we are done with auto trading. The auto trade took one trade on the ES 2900. The ES took the first trade, and on the new auto trade, this one here nailed 1650 in half an hour, and this one here we are closing 1614, and the YM 2495. On the market analyzer, we have, based on one contract, the last entry signal, only the last entry signal, not the whole day. 400 takes into the profit. You don't have to take all of them. You can take ES, NASDAQ, Dow Jones, and it is based on one contract. And we will start now. We are going to the short position, but please be careful with the short position at the moment, because the ES has many problems in this area here. And when you are auto trading, you're gonna have a lot of problems in there. And it doesn't matter where your auto trade coming from, you're gonna be in trouble. The market was trending nicely in here, then come into the resistance, and now it start going to different direction, and there is a lot of volatility in here. Without the fibs, you cannot trade any market. Without the fib zone, you cannot trade any market, or you cannot auto trade anything. It's very important to understand where we are in the market, and that is not looking good for an auto trade, any auto trade, because the amount of support we have here, and if we look at the pressure in the market in here, the seller little bit over the buyers, this is not indicating the market is strong to the short side, indicating there is weakness to the short side, and then it's gonna bump into problem in here. This is one big pile of mud. You don't want to be in it. Whether you are auto trading, manual trading, you cannot be in this area taking a position at your broker, no matter who you are, no matter how smart you are, you're gonna get your fingers burned. Disciplined, understanding when is the best time to unleash your auto trade, or if you want to take a position manually, you have to understand there is a certain area in the market you have to hold on. Once we see this market go below those lines here, 39.17, then it is shortable. At this moment, the ES is not shortable. Even if you are taking a trade, yes, we have a plenty auto trades taking a short trade. And this is the chart it was a minute ago here. This is the same chart. It's taking the same trade. But you cannot activate a new trade. Again, you cannot activate a new trade when this market going into this area here. If your auto trade is already in a trade, You gotta keep watching that trade carefully because there is still not out of the wood until we cross this last number right there. So there is a difference between an auto trade taking a trade and is already in a position, or if you're auto trade a closed position and now looking for a new trade, you should hold on to this trade, because when the market enter in this area here, this is a bad news. Another things also, if this market go below that number, again, we're not your financial advisor. You're not paying us here. This is not a trader room. This is a strictly educational. So whatever you do, it is on your own risk. So here it is. When we have a trades, if this market going farther than this line as we expected, you keep those auto trade on. If this market not able to break this line, the last support area, we are expecting the ES going all the way up to the 39.32. 39.32 as a re-entry point, and I don't like the re-entry point out there because there is a huge support and resistance in this area. It's not a tradable area. If this market pull back to this level here, it's not a tradable area. There is too many lines, there is too many support, there is too many resistance. This is where you get your fingers burned. What we need, an empty space. And if we notice here, this is not a good sign, because the reversal we have on the NASDAQ and the ES, they are not repaint like some other indicators you've seen out there. Those are not repaint. So when we start getting those reversal signal, you gotta keep watching this market like a hawk and try to maximize your profit and ready to override the auto trade by force close position, and you are done for today. This is a very funny. We were doing a webinar on Monday for our members, and we have one gentleman. He was testing this, the ones here, the gray one is a new auto trade, and of course all our traders, they are testing the new auto trade, and he said something. This has really caught my attention. When he was testing it, he made $14,000 on it, and in 2 days, he gave up his profit, the 14,000, and he said why, and the reason is he was auto trading all day long. Because when you are auto trading all day long, if the market is moving, you're practically printing money. But when the market is not moving, you're practically losing all your money. So I try to explain to him from what time to what time he needs to start and stop, and then use a daily target, not just letting it go 24/7. But in the same time, this is a very fine line where you say, I got $200 on that trade, I'm happy with. I got $2,000 on that trade, I'm happy with. I'm going to close the trade. This is the max I get, and I'm not going to get a headache for the rest of the day. So if we notice here, the system fired a reversal. The second reversal, the same thing apply to the NASDAQ. So this is an indication of an option for the trader A minute ago you have $5,000 on the NASDAQ, and now you have 3,600 on the NASDAQ. You just blow $1,500, and then you are doing extra work, and you are putting more time exposing yourself to your broker and your account. So to be smart with it, any number, whether is it 200 or 2,000 or 4,000 or 800, whatever the magic number you are pleased with, when the market is moving, close the trade, call it off for today, and don't try your luck for the rest of the day. If you are free, try to, for you to practice, turn on, because once you practice manually, it will be easier when you are auto trading to make decision. So you can open an empty chart and start taking a trade on a sim. We have a reversal. I'm going to take a reversal. Now it's going long. I'm going to take a long trade. Now I'm going to take a short trade. On a sim, it's not for you to trade manually, no. But it is for you to learn more experience, how you can maximize your profit. And when you are doing this, 1 minute you had on this NASDAQ 5,000, when the signal fired reversal, if you're not paying attention, now your money shrinking almost $2,000 less. If you were paying attention, there's a support line, a reversal, you have $5,000, you close it, you close your computer, you go home. This is the different. The smart trader is not the higher P&L. When a trader brag on the internet, he made blah, 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 the higher the number he get, the more high risk trader he is. The same thing for this gentleman on Monday. He got up to $14,000 and he gave them all up in 2 days. And this is, we have seen the last 15 years. Those the ones on a very high P&L, they have a high losses as well. It does not come one direction, able to make $14,000 and not having losing money. It is about losing and gaining. So the smart trader is not the one who gets the higher P&L. Is a wrong message. The higher the trader P&L he gets, the higher risk trader he is. The less trade you do in the market, the smarter you are. You cannot trade 24/7 on an auto trade without babysit, looking at the market, direct that auto trade, pause the auto trade when it's not trading, unleash the auto trade to go long or short. If you don't manage it, it's impossible to treat it as a dishwasher machine. You turn it on in the morning and it's gonna keep popping out money for you all day long. It's this exactly like you're sitting on a gambling table. You're not gonna be winning. So now if we want to see what happened in here, we have the reversal fired. It was a genuine reversal. The market came into the double resistant area here, did not succeed, and now is going to the same level as where we have 37, 39, 17. So now if we watch this market, what this market is doing is going to a circle, and now it's going to go back to the 39.17, and it's going to stop going back and forth. The trick is the market spiked 2 times today, one to the long side and one trade to the short with a very high risk short. Now what you see here, there is a confusion in the market, and the market got stuck between a heavy resistance and the market start getting a heavy support. This is where 97% of traders or auto traders fall into this trap, not recognizing the market get caught in the channel and there is no exit out, is going back and forth like a pinball ball and trying to find an exit, and there is no exit. In those conditions, this is where the most traders start losing money, whether your profit today was 200 or 2,000 or 10,000. This is where the most confusion happening among amateur traders working with an auto trade. They do not recognize when the market is flat, sideways, or when the market is trending. They keep their auto trade running and they keep looking at P&L. And then to keep him more blind, most likely he is using a Renko bar. So now he's completely handicapped. He has no view of the market direction. And this is where 90% of traders making the same mistake. So now this is your second chance. The market going down, this is your second chance to maximize your profit, irrelevant if this market gonna go 3 bars further down or 5 bars further down. Is irrelevant. It can be turning around from here, or it can go 5 more bars down. It's irrelevant. When you see the number, you are happy with it. Cash in. Your best choice is to cash in and regret later than to be in the market and you cannot fix the problem when the greed come and take over us. Always remember, you see number you like, you say, you know what, I'm gonna cash in and let me regret it, but at least I have my money in my pocket. If we are exposing to the market and the position open at your broker and the market turn around very fast, you cannot fix this problem anymore. So always try to cash in and regret later with more money in your pocket and regret than to stay exposing yourself to the market with a higher risk. The market can go further down or the market can turn around very fast. Can go either direction. And we don't want to take chances. Another trick you can do, don't go for the daily target. Go for the weekly target. Let's say you are aiming 100 take a week on a CL or on an ES. Once you accomplish this 100 take a week, 150 tick, 50 ticks. It doesn't matter. This depends on the size of your account and how much risk you want to take. And then when you accomplish this Monday, Tuesday, Wednesday, whatever, then you stop. And then you look at this market. When you see it is trending, you unleash the auto trade. If you don't like how the market is moving, you skip the rest of the week till the week after. This way, you maintain your profit, you maintain your weekly profit, because you cannot say on Monday, I'm going to stop trading when I see $1,000. Maybe on Monday it's going to be sideways. And you're going to go down 1,000. You're not going to make 1,000. You cannot say on Tuesday, I need to make 2,000. You can be losing on Tuesday and you just made little money on Monday. You cannot go from day to day on a daily target. The auto trades have a daily target. On any given auto trade, have a daily target. In our system, you can put it on $1,000. And if the auto trade, as an example on this, whether your daily target 500 or 1,000, you're still gonna get 4,515. Why? Because the auto trade is gonna stay on that trade. If the market is trending, it's gonna stay on that trade, whether your daily target $500 or $1,000 is gonna stay on that trade. The thing is, if we are on a weekly basis, 5,000, and today we snap 4,500, stop it. Stop it for the rest of the day. Tomorrow you fire your Ninja Trader on. If you see this market moving, you turn on your auto trades on a sim. If you see the market is biting, like when you are doing with the fishing rod, if you see if this market moving, your auto trades are generating money, turn on your auto trade for another 1,000 or 2,000, whatever it is, close it. Rest of the week, you get your standard higher in order for you to jump into the market, or maybe you need to skip. When you are using a weekly target, you're being much smarter than this guy bragging today he made 2,000 or 3,000 or 200, because this guy is a high risk. Today he's gonna make 10,000. Tomorrow he's gonna lose 20,000. So we don't go by the P&L. We go on the bigger picture, as we see here. Between this trade where the system told us to maximize the profit, here. This was 10 minutes ago. On the NASDAQ told us to, here's a reversal trying to maximize profit. What happened? From that area, your NASDAQ went up, then went back to almost to the same area as where the reversal fire, plus minus couple $100. If we look at the ES, it's the same story, and it is couple $100 differential. The thing is it worth it, those couple $100 differential? No, it's not worth it. Do you think you're gonna get 3 more bars? It's not worth it. Because now the market can go immediately to the 39.31 and all your profit, they're gone, or at least half of it. Or you are going to stay in the market for a few more ticks. We are a human. We evaluate. The auto trade is a machine. It's a coffee machine. Does not evaluate. For you as a trader, you need to use your head. You say, I catch a trend. I made 3,000, 300, 400, 5,000, whatever. I'm cashing in, and I will regret later. This is what I want, the attitude. Cash in, regret later. At least you have more money than to expose yourself to the market for no reason. When I see $1,000 on this table, I'm going to pick it up and regret it. I'm not going to sit down, look at the $1,000, want to make it 2,000, and the 2,000, 4,000. It's going to collapse on you. So if we notice here, we are sitting on idle on the same area, plus minus a couple $100 in a trade. Is it worth it? You ask yourself. Should I override the auto trade by push the panic button on it from the top and close that trade immediately? It's right there. It's very easy. Takes 1 millisecond to take your profit off the table and walk away. So, if we notice right now, this is the biggest mistake traders do when they are auto trading. They don't know when to stop. They don't know when to start either. By doing the optimization, I have never seen one day is the same. I have never seen the market spikes at 9 o'clock every morning. Sometimes 9:25, sometimes 9:15, sometimes 10 o'clock, sometimes 11 o'clock. All this garbage, optimization, predicting the future, when you should start your auto trade, is just a bunch of rubbish. And this you will never be able to optimize. It can give you the average. Maybe it will be better to start around 9:30. Can give you an average. Maybe you need to start this auto trade at 9:45. But maybe the market will spike 5 minutes before the 9:45. You're gonna miss. So always we need to find balance. What we need in the market with less risk and less trades. The more you trade, the more you're gonna lose money. The less you trade, the more money you will make. It's the opposite what you've been told by a guy cannot even trade a paperback. So if we look at this ES, it took a little more dive. I'm not going to argue about it. Where is the major support area? It's right there. Yes, took a little more dive. Is it worth it? I'm not sure. Because it could have went the other direction. It could have went this direction. After the fact, it's very easy to say, oh man, I could have stayed. Oh man. No, but I want you to look at this chart. When this market was going the opposite direction, what you said to yourself? Oh man, I should have closed in here. Yeah? So when your Nasdaq was on a $5,000 profit and it shrank to 3,000, you regret to close in here, isn't it? Then the market came into the support area, could have turned around, could have, and then you're gonna have a second regret. Man, I should have closed it at 5,000. Okay? So the market took a little more dive. Today it is in your favor. Would be tomorrow the same way to your favor? No. Today, if you stayed longer, you would have earned more. Okay, we're not going to argue about it. Double than what we are expecting. Fair enough. But do you think it's going to happen tomorrow? No. So always try to be reasonable with yourself and say, I'm happy here. I'm happy to cash in here. I'm walking away. Cash in here, regret later. Yes. So at the moment, there is nothing to say. I mean, the market is going one direction, and we will be quiet for a while to see. I think the ES is finished. This is the bottom on the CL. I think it is finished. The trending down is finished. Most likely the ES is going back to the 39.22, and we'll see what will happen. I'll keep the microphone off. Thank you.